Did you realize that this will completely alter the trajectory of Tesla stock? As per Cathie Wood's claims, as a business, Tesla is renowned for its creative innovations. Keep an eye out and stay tuned to see how these developments affect the price of Tesla stock. Although not every change is positive, Tesla is renowned for its continuous innovation to improve its goods and services. Tesla continues to work towards giving its consumers better services and goods in spite of the stones thrown at the corporation. You are about to discover the meaning behind Cathie Wood's statement that this will change everything for Tesla stock. The majority of other automakers won't be able to match or surpass Tesla's combo unless they want to lose money on the vehicles. So that's very important from a performance point of view and a range point of view, states Cathie Wood. According to Forbes, Cathie Wood is an American investor, a renowned stock picker, and the founder, CEO, and CIO of ARK Invest, a $60 billion firm that makes investments in cutting-edge technologies like genomics and self-driving cars. Because of her ability to persuade others with her investing arguments and her track record of success supporting her surprisingly astute claims, Cathie Wood is frequently referred to as the most underappreciated investor in the game. Additionally, Wood is well known for her monthly updates on a variety of topics, including innovations, monetary and economic policies, what's to be expected in her area of expertise, and commentary on Fed decisions. The United States Central Bank, the Federal Reserve System, or Fed for short, is in charge of overseeing the country's financial and monetary systems. Wood stated that Tesla has a distinct advantage over other automakers when asked her opinion of the company in 5 years. According to her, Tesla is the greatest option when comparing automobiles based on power and range rather than brand. Nevertheless, she claimed that, despite the fact that well-known automakers like BMW and Volkswagen have made great strides recently, Tesla still outperforms them in terms of combining power and range. According to Wood, most other automakers won't be able to match or surpass Tesla's combination unless they want to incur losses on their vehicles. Wood stressed how crucial that is from both a performance and a range perspective. When asked what she thought about big businesses trying to compete with Tesla in the development of electric vehicles, Wood said, "They are failing miserably. It's not the same with branding." Although there is a strong brand loyalty among consumers towards these other automakers, Wood believes that when buyers begin to consider the specifications of other cars, they will eventually switch from petrol power to electric power. She claimed that while brands alone might still be able to influence them, they won't have as excellent of an electric car as Tesla would. According to Wood, they have been examining the capital expenditure plans of conventional manufacturers in comparison to Tesla. If it hasn't already, Tesla plans to increase its spending on electric vehicles over the next year or two. According to Wood, the majority of people believed that Tesla had little chance of survival 5 years ago and that it was more likely to go bankrupt. However, the business is currently releasing cash and investing as much as it can to introduce new initiatives, and Wood thinks Tesla will reveal yet another one before the year is up. Having said that, Wood has a great deal of optimism for EVs and Tesla. According to ARK Invest's most recent stock model, Tesla may be valued at an astounding $4,600 per share by 2026, a 560% increase from now. Our long-term prognosis was recently revealed in a report, and the numbers have increased significantly. And yet, we believe it to be tremendously undervalued. Two underlying presumptions have been refuted in the last several reports, according to Cathie Wood in an interview. One of their bull cases for Tesla under the previous model, according to Cathie Wood, was that it would lose 1/3 of the market share it held in 2018, or 17% of the worldwide market share, including China, as rival EV companies entered the market. But in the last year, the percentage rose to 18%. According to Wood, they are falling short in the area of battery technology because they are not following Tesla's lead in lowering consumer electronics costs. According to Wood, Tesla uses a lithium-ion pouch, which is significantly more expensive than the batteries it uses for consumer electronics. As a result, if businesses choose to compete with Tesla, they will have to sell every electric vehicle at a loss and risk losing business from internal combustion engines. According to Wood, the reason Tesla is so far ahead of its rivals is because they are still in the early stages of their development. According to her, the vehicles they have supplied thus far don't even come close to matching the Model S's range or other specifications from Tesla. The CEO of ARK Invest stated that Tesla possesses 3 additional benefits. The first one is its battery system. Secondly, they possess an AI chip of their own. Wood claimed that their analyst James Wang, who spent 8 years working at the artificial intelligence company NVIDIA, was astounded by the specifications of Tesla's semiconductor. According to Wang, Tesla is 4 years ahead of all other automakers in terms of available semiconductor technology specs. This is critical to Tesla's objective of using electric vehicles to become autonomous. Artificial intelligence initiatives are directly related to being autonomous, and the winner will have the most and the best quality data. The nearest rival, Waymo, only has 20 million real-world driving miles compared to 14 billion for Tesla. Lastly, the fact that Tesla is the only automaker still offering over-the-air software updates to Ultra Performance gives it an advantage over rival businesses. The ARK Invest firm, run by Cathie Wood, estimates that in 2026, Tesla's robo-taxi operation will generate over half of its estimated earnings before interest, taxes, depreciation, and amortization EBITDA, and 62% of the company's enterprise value. In terms of earnings, it is anticipated that by 2026, the robo-taxi industry would account for 34% of Tesla's total income, while the electric car industry will account for 57%. In 2026, if 10 million units are sold in the worst-case scenario, the corporation would have made $374 billion in sales, a compound annual growth ratio CAGR of 24%, and a share price of $2,900 with a market worth of $3.3 trillion. Taking into account a positive scenario wherein 17 million units are sold in 2026, resulting in $513 billion in revenue. Additionally, Tesla's share price would reach $5,800, giving it a $6.7 trillion market cap with a 42% compound annual growth rate. This is presumably the reason Cathie Wood believes this stock has a 560% upside. What is your long-term outlook for Tesla stock? Post your ideas in the space provided for comments below. One of Tesla's creative innovations is the GigaPress. According to Sandy Monroe, an automotive engineer with a focus on manufacturing and machine tools, the GigaPress produces vehicles at a rate of over 100,000 units annually and outperforms traditional stamping when creating a new model. He pointed out that until the GigaPress becomes financially advantageous, its break-even point will likely be more than 100,000 automobiles. Next, it is going to shine brightly. A stamped and welded carriage lower platform will be no match for it, according to Monroe. He clarified that the cost of the GigaPress with tooling will be significantly lower than that of a steel stamped product. Furthermore, Tesla hopes to resolve its battery crisis through the world-famous Gigafactory. With a more than 1.5 million square foot area, the lithium-ion manufacturing facility hopes to assist in increasing production to over 500,000 Tesla vehicles per year. Musk has even implied that in order to meet demand, the business would require many locations similar to the Gigafactory. Wood is especially pleased with Tesla's response to issues brought on by the COVID-19 outbreak. In order to keep its factories and plants operating during the pandemic, Tesla rewrote its software and switched suppliers while other manufacturers and companies struggled with chip shortages and supply chain delays. Furthermore, Austin and Berlin now have 2 additional Tesla production plants available. The goal of these additional plants is to boost output in tandem with the Fremont and Shanghai units. These advances may result in higher operating margins and greater manufacturing scale. They were able to attain larger gross margins with the opening of Austin and Berlin. This demonstrates how the industry-leading electric vehicle firm prospered in spite of multiple obstacles, demonstrating that Tesla defied expectations and has a great deal of potential for success. More, in a prior video that she produced, Cathie Wood asserted that innovation is a problem solver and that implementing new techniques might help save expenses and maintain profit margins. For additional content on Tesla stocks, subscribe to our channel and view our other videos.